Live. Oh, we're live. Hi, Conrad. Thank you so much for coming on to Venture with Grace.
Of course. It's good to see you. Again, it was just a month ago, right, where we were in person at Hans's Consumer Summit.
Yeah,
Here in
exactly.
Montreal. We had, I think, quite a bit of fun doing that.
Yeah, it was so fun. So I loved moderating you guys, and then I feel like the Texas VCs are so just amazing, super supportive. Everybody is like very down to earth. It was like such a great experience.
Well, I hope you stayed a couple days longer to enjoy, Austin and all the good food that it has to offer.
Yes, I definitely want to do a comeback, and then we can collab on more stuff. Um, so before we started the show, I want to give a quick shout out to our sponsor. So the episode is brought to you by Verivend. If you're a GP or LP looking to simplify the capital raising and deployment process, Verivend is here to help. Trusted by over 800 funds and managing more than $2 billion in transactions, Verivend offers a secure, streamlined payment platform designed specifically for private capital markets. Say goodbye to manual reconciliation and repeated follow-up. Raise and deploy capital faster with greater transparency. Ready to make your fund operation smoother? Visit Verivine.com and see how easy it can be. Okay, to before we start the show, I would love for the audience to get to know you a little bit more. So you are I wouldn't say like I don't know if you could consider yourself like as a career VC because you started your career in management consulting and then you worked at Bain and then you become a product manager and then you become a VP of Norwest before you started your own fund. Why don't we talk about what were some core lessons that you've learned early on in your career kind of shape you into who you are today?
Yeah, it's always fun to kind of talk a little bit about kind of why you do what you do.
Mhm.
And maybe I'll start with I think like where it kind of all started. So my first I think passion was actually I started a company way back in college,
Mhm.
and it's not a story I share too often, but it had I think a pretty meaningful impact on a lot of the things that I would do, and it certainly kind of plays into the founding story behind Ensemble.
Mhm.
And I think the company, it was called Longhorn Auctions. This was pre Facebook, pre Chegg. There wasn't a huge outcome. Obviously, we weren't the next Facebook or Chegg, but I think the important lesson was who you really go into business with, right? Who you surround yourself with when you start a company.
Mhm.
And there's a lot of folks that are highly competent that you can start a company. People that are the smartest people around you. But I think the lesson is there's a level of trust that you have to have, I think, with your founders, your co-founders, and the people that you go into business with. And fast forward to today, my two other co-founders in Longhorn Auctions, one of them ended up being the founder and CEO of Casper, which ended up
Mhm.
going public. I invested in the seed. And then the other co-founder is now the CFO at Row. And so we
Mhm.
had divergent paths, but all kind of stayed within the startup or tech ecosystem. But I think it just goes to show you, what your mom used to tell you is, you are who you spend your time with. And it's kind of I kind of mentioned as a funny story, but it's the team that you start with, right? We would not have, I think, predicted that Philip would go on to start Casper and Aaron would go on to become the first finance hire at Row and eventually become CFO. And then I would have this journey of being the investor, I think, of the three of us,
Mhm.
and working at Bain Capital Ventures, Norwest Venture Partners, running the venture portfolio at my alma mater at UTIMCO, and then finally starting Ensemble with Colin and Gopi. So again, it kind of goes full circle. But I think the key lesson is building something and really thinking about the people that you're doing it with beyond kind of what it actually is.
Mm, totally. How do you, I guess, how do you select the talent that you kind of work on projects with? It seems like you're a great talent scout, or maybe they're a great
Yeah.
talent scout at you. But yeah, you
Well,
you all seems very successful.
it's not a mistake, right, or not a coincidence that we call our own firm Ensemble, right,
Mhm.
which is team. And that is like the real ethos behind, how we invest, right? Why we, our North Star when we think about, what does it mean to be AI native, right? What we're trying to, I think, solve for is, increasing the slope of innovation. And we do that by, finding and backing, the best teams that are out there, right? Based, I think, on more objectivity, um, and beyond, I think, what we kind of would call like, vibe checking, right? Hey, this person went to Stanford, this person went to Harvard, so I'm going to automatically invest. And then I think a big part of that also is, and I think a core, tenet of why we call ourselves Ensemble, versus, I don't know, founder ventures, right? Is that it extends beyond just the founder, right? And so your first hire, second hire, right, who you even co-found the company with, I think tells a lot about the potential, for creating, I think, something meaningful, making a significant impact. And that's a big belief of ours, right? So we call ourselves Ensemble, and then when we use our, data-driven approach, we evaluate the whole team, top to bottom, right? Not just, I think, overly focusing on one single person or one single data point. And that's really, I think, a common misconception, I think, within venture is, founders are important, but it's really about the team that in the whole village that creates the outcome.
For sure. I love that. I feel like that analogy is super critical because of like it's about your team instead of just like a one person game. Almost every company is now built by one person, though I feel like with the help of AI, everyone's banking on like, having a very tiny team to build something big. But team is still very important. Speaking of team, you guys recently announced the Unity platform. Why don't we talk about that? So it is like a AI platform that you guys have built. It's kind of like a co-pilot for venture capital, ranking the startup teams based on hundreds of objective data and predict their likelihood of success. So what consists of like the benchmark that you are kind of like thinking is important as data? So you mentioned about like briefly, we talked about like, you mentioned about like these like, Stanford, MIT people or whatever. Like, so people who have great technical background, that's obviously a plus. But what are something that you feel like are important to be screened at the very beginning?
Yeah, that is a common question that we get, and maybe before I go into the details, maybe for folks that are listening, I think it may be important to kind of take a step back, to really focus a little bit more on kind of why we founded Ensemble, right? And then really kind of what we're trying to solve for, because I think that'll actually put a little bit more context into how we think about teams and how we measure that. And I'll kind of preface this right with this can be a little controversial, so maybe I'll put that kind of banner out there first. But if you take a step back and you think about the biggest innovation that's happened in venture, maybe in the last 10 years, right? There's been, I think, multiple things that you can point to, but maybe the single obvious one is the talent agency model, right? So what I'm specifically specifically pointing to is let's say Andreessen Horowitz, right? They had this idea that they could professionalize the business of venture, and took inspiration from all the talent agency models in Hollywood, right? Kind of building a firm to cater to every kind of specific need that the founders or company would need, right? And so fast forward from Mark and Ben, today Andreessen Horowitz kind of does everything, and it's powered by 550 people, right? Like 550 people is like an army of people, right? I mean, that's literally like I don't know, like a platoon or something, right? And our belief is that the next 10 years, the biggest innovation in venture will look radically different. And that's because this talent agency model has worked, I think, quite well. But at the end of the day, right, every firm has now adopted it, right? Every large firm has a big portfolio services team. And what that tends to look like is hey, Grace, like you have an amazing company. I know you're trying to find customers. Let me introduce you to Bob and Sally, right? They're the best in the business, right? They'll help you go find, all the customers that you need. And I think the best founders, would tell you that, those promises tend to be like, in some ways, like not always, right? But sometimes empty promises where they overpromise and underdeliver. And it's not that surprising, right? Humans and people, have limitations, right? They're not infinitely scalable no matter how big that team is. And so our belief, and this is maybe the controversial part, is that the next big innovation venture for the next 10 years, will be this AI native venture firm, right? So VCs are, looking and scouring the world for, the next $10 billion startup founded by 5 people, leveraging AI. Why shouldn't AI also have the same impact on our business, right? I think that's something that most people would probably agree with, right? That AI will change fundamentally how firms will look and how they operate. And you're starting to see that happen. But for us, like this is the bet that we made, many years ago, when we had this idea that we would use machine learning or having a data-driven strategy right before the open AIs were popular, before everyone was using ChatGPT. We were getting laughed out of rooms, right? Like, venture is this art, right? Everybody has this magic. There's no way that data could replace or certainly even augment GPs in a meaningful way. And fast forward today, we kind of built our firm from the ground up. There's 11 of us on the team. 6 of us on the data science engineering side, and that's been a real advantage. And then in terms of like how that's manifested itself into our investment process, it's radically different, I'd say, than what I was doing at Norwest Venture Partners or what I was doing at Bain Capital Ventures, right? It's fundamentally like technology is integrated into every aspect of our workflow. And then when it comes to what specific signals, that's always like the question people ask, like what's the is it founders that are left-handed that have better outcomes, or is it folks that have this specific background? And that's maybe the common misconception, right? There isn't a single signal or a couple signals where it's a Harvard Business School case study, right? Like you go and find all of the people that have left-handed, that wear black shoes, that came out of this specific school with this specific major, or we should just back all those founders. The reality of it is, and this is where AI and having data is really relevant, is you actually need to contextualize it. We have a company in the portfolio, Blueprint, which is an AI assistant for mental health therapists, right? The type of team that you would need to make that business successful, very different than Saronic, right? Which defense technology company building autonomous surface vehicles, right? So like intuitively that makes sense, but there's all these characteristics that you'd want to look for. And for us, we have the ability to look at those characteristics at scale and then contextualize it. If we're looking within, mental health, we're looking at a defense technology company. So the power of it is doing things at scale and then looking for a lot of like, not a single signal, but hundreds of signals that collectively, again, don't tell us to make the investment decision, but telling us, hey, stupid, right? There's a lot of really interesting talent here. You should go investigate and be, data-driven thematically.
What are some things that you feel like, let's call it like 3 specific benchmarks that make the unqualified qualified candidate for people that you are looking at compared to, we have some other great VC firms leveraging data, like let's call it like a signal fire. People always call it like, LinkedIn on steroids about what they're building. But like, I guess like compared to like a traditional, I guess like data driven firm, what would you say are like the differentiated small like sub segment that you are looking at that you feel like will give you the alpha versus the like a normal firm with a data thing?
Yeah. Well, like, first of all, I'd say like any firm that uses data is good for the world, right? Like what we're trying to, I think, shift the paradigm is this like, vibe investing, right? Where, founder comes in, right? You look at them and you say, hey, for, X, Y, and Z reason, right? Based on, human pattern recognition, this is just not a fit for us, right? So like any firm, that uses data, like we're all for it. Like we think that is maybe going to be, again, the biggest, differentiator. And there'll be, I think, multiple, folks that benefit it. And at the end of the day, I think it's going to be founders and LPs that benefit the most, right? Like, backing the right teams, being more objective. And so anyways, like I think that's like super important. Like, we're disrupting like the old school way, I think, of investing, where, we've tried to, I think, push the envelope is around taking every kind of function within a venture firm and thinking about, where, AI and where data can actually benefit it. And so when we started, it was about, making sure that we're spending time in the right, thematic areas, right? Where's early interesting, talent coming from? So within AI, like untraditionally, right, folks were coming out of academia, right? Within defense, right, Dino Mavrikis, who's the CEO, founder of Saronic, like, he came out, he was on SEAL Team 6, right? So there's not a lot of precedent and pattern recognition of like, oh, I'm going to back every Navy SEAL that, comes out, right? And so their talent is coming from untraditional places. And so that was kind of maybe V1 of what we were, hypothesizing, testing, and then validating that we could actually, bring data to it. Fast forward today, we're, on V3 or 4 of that piece of it. But we've also thought about, where can data and AI actually improve the founder experience? And that's actually how we engage with founders. And so, again, very, very different than I think a traditional VC, in that when we show up to a second meeting, the irony of it is like we're demoing our product, right? Like we're saying, hey, what you're doing is very interesting. We think we could be helpful and go to market. Let us show you, the Ensemble GTM 2.0 product, right? Let us help you with go to market. And it's not, hey, Grace, here's, Bob and Sally. It is, hey, here's, Ensemble's GTM 2.0 platform. We've actually customized it, based on what we know about your company. And here are some prospective customers that you should meet. And oh, by the way, here's how you get in front of them, because you're actually, connected to, the potential decision maker. This is the person's name. This is how you get in front of them. And we've automated that, right, to a certain extent. And so it's a radically different, like, experience that a founder has, which is like, wait a minute, like I thought you're going to show up and, ask me all these like silly questions, but in return, we've actually flipped it where we're actually demoing, showing, our go-to-market platform. And then that in turn helps us position ourselves to win, but also through those customer introductions, we actually get a better sense of, a prospective company's go-to-market, how they think about, selling to customers.
I love that. I feel like helping them seeing like a better version of their own product is definitely really powerful to like help them build the company and like just like I guess reverse the pitch to win the deal. Before thinking about winning the deal, why don't we talk about like Ensemble as a fund? So there is you guys have backed some like really amazing deep tech company, healthcare company, but why don't we talk about like the primary focus at the beginning? How do you guys like kind of came up with the fund, and what is the typical check size and portfolio construction?
Yeah. So that, again, like kind of related to your first question, right? It's who the people that you surround yourself with. I'll start with a little bit of another funny story. So Colin and I, so there's 3 founders: Colin, West, Gopi Sundaramurthy, and then myself. And Colin and I met, I think it was 2013. We were junior young VCs, like in the trenches, right? In SF, running around, trying to meet like every founder, we heard was like interesting, right? So this kind of like random walk in many ways. And we met each other actually through Next Gen. So Next Gen is like, yeah, it's amazing. And it's still persisted. And it's like all these folks that we know. I know you interviewed Roseanne. from
Yeah,
Renegade.
yeah,
So, Roseanne's a good friend of ours. Roseanne and Colin were actually on the Next Gen board. Colin was chair.
wow.
So yeah, all these like interesting. Again, it's the company you keep, right?
Mhm,
Um, and so Colin and I became friends through that. We ended up investing together. We were both actually seed investors in Casper. And then
mhm,
the funny story is, as friends would do, ask each other for recommendations. And Colin one day asked, like, "Hey, do you know any good dentists?" Right? Like, it's like a pain to go find one. And like, Colin, I got the perfect dentist for you. And it was actually my girlfriend, now wife, who ended up becoming his dentist. And so, through that experience, like, we got like, in some ways even tighter, right? Because,
mhm,
my wife is like, giving him, checkups and stuff. And I'm hearing from her, hey, you should go catch up with Colin. And then Gopi kind of enters the story in that the three of us, we all kind of lived within like a couple of miles of each other. I was in Redwood City, and then Colin and Gopi were like, living in Mountain View. Um, and it's just it's this funny kind of story I mentioned. It's just like the proximity of people that that and you trust.
mhm,
And for us, like, we kind of call ourselves in some ways like the Three Musketeers. So Colin was at Correlation Ventures way back in the day, which is the first major data driven fund, right?
mhm,
It was limited, I think, by by the data at the time, but it was very, I think, visionary in terms of like bringing more data into venture. And so that was kind of like a big impetus with this thesis of bringing AI and more data to VC. And then Gopi, I can say this because he's not in the room, because I think he's pretty humble. But Gopi's the smartest and really the genius of the three of us. So Gopi was kind of the wonder kid data scientist at IBM Watson, the first data scientist at IBM Watson Health. And he's responsible for all the things I talked about AI. Like, I'm not building it, but Gopi and our data science engineering team, which is 6 people, have really invested, kind of built it. And then my background, in some ways, is I run our investment team, and I kind of make sure I keep the trains running on time, right? Put the process from that I took from Norwest and from Bain Capital, and really kind of operationalize what it means to actually use data and use AI, I think, in a very thoughtful way. And so that kind of translates into a high conviction strategy where we do run a more concentrated portfolio. In each fund, we typically have 16 to 18 companies, which is, I think, lower than what you'd normally expect for a seed Series A firm.
mhm,
Um, and our check size tends to be anywhere between 3 million all the way to like 6 or 7 million. And we kind of have that range, primarily given our thesis that if we're going to go back to the best teams, right, and that's our goal, and that's our North Star, we have to be flexible in terms of um, how we collaborate with other VCs. And so
mhm,
in a lot of ways, we don't compete with the the Norwest or the Coastlas or the Bain Capitals of the world. We actually work with them in many ways because of the check size that we have. And so in about half of our deals, we'll lead or co-lead them, and then the other half, will participate. Our North Star is to optimize for great teams, right? Sometimes that means that we're not going to lead it or even co-lead it. But our goal, right, in order for that collaboration to work, is to show it first. And so when we do
mhm,
show it first, we're we're very collaborative. So we'll share deals with other firms, right, that may ultimately lead it. But given our check size, like it's a win-win for the founder, right, because of how we support the company in a very specific way. It's a win for other firms because we're very collaborative in terms of whether we lead or not, and that's a win for us because even $3 or $6 million check is very, very meaningful for our fund size and for our LPs. Because I mean, Saronic is a great example. We invested in the Series A, and that's above, close to a 9x for us already.
I like, maybe we could dive into Saronic, maybe or any other of your favorite portfolio companies. I'm thinking about Saronic because like we just talked about it, and also like when I was hosting my own like Texas dinner, people were talking about it. That was kind of like the unicorn of Texas right now. So why don't we talk about like how do you kind of like fund the firm, like fund the company, and then how do you kind of like diligence it to winning the deal and thinking about like not thinking about exit, but like thinking about the potential of how they exit when you are investing or like predicting the company's outcome. And we could talk about like, I guess the evaluation of like I guess like evaluation of potential outcomes, similar to like what I just had about the exit kind of stuff.
Yeah. Well, Saronic is an easy one to talk about because they're doing some pretty cool stuff. And, we've known Dino and the team for, since the Series A. And so maybe, again, giving some context on it, because I think things happen for a reason. And we try to be very deliberate about, again, where we spend our time in a very thoughtful, structured way. But, defense investing wasn't something that, we read about in the Wall Street Journal and said, hey, let's go do this, right? The genesis of where it started was kind of twofold. One, right, given the amount of data that we track, we could actually see, I think, very interesting, talent, flowing into defense, very, very early on, or certainly like dual use companies. And so our first investment in a defense related, company was actually Icon. So for the folks that aren't aware of Icon, Icon 3D prints structures. So they extrude concrete and basically build, walls that are, much higher quality, cheaper, and faster than, traditional, frame construction. And so immediately you think about, oh, well, you can use it for residential, you can build homes, and in fact, you'd be right. They've completed a 100-home community with Lennar, which is one of the nation's largest home builders. But what people maybe not immediately think about is those same applications of, using proprietary concrete to build structures very quickly could also be used for a, forward deployed, Army barracks, right? Those walls can now be bulletproof. They can be, EMP resistant. They can hide a, geothermal signature. And so Icon actually has a very, robust, government business. And so we invested back in 2019 when there was no like defense tech industry, right? People were like locking themselves in buildings, right? Saying like, no to, working with, the DoD, right? And, it wasn't, I would say like popular. It wasn't unpopular really at the, but it was an area that I think was overlooked. And so through that experience, we, I think, understood, what does it mean to build a go-to-market machine to sell into the government, right? Because back then it was kind of in some ways a dirty word, which is, oh, there are long sales cycles, there's a single customer, right? Like, oh, that's really tough, right? And there's a hardware component. But through that lens, we kind of understood, what it means, in that the government, can be a very good customer, right? You have to know how to navigate it. And more importantly, you need to fulfill like a specific capability that they're looking for. And so, comes Saronic. And, the backdrop of this, if you remember, and I think it was February of 2022, Russia invades Ukraine. And even, prior to that, they were in Crimea. And so, taking, our experience from Icon and then taking that macro perspective, we kind of paired it with, where are all these interesting, folks moving into? Where are they starting interesting businesses? And so what we could see very early on was, one, Dino comes from a little bit of an untraditional background, right? Very cool, right? And also relevant, coming from SEAL Team 6. But we could also see very, very early in the life of the company that they had brought on very key people in both the hardware component of building an autonomous surface vehicle, but also on the software side. So Vib, joined from Anduril, and he was running autonomy at Anduril, and he joined to help build the autonomy function for Saronic. And then Doug was at Liquid Robotics and was, had the hardware kind of background, right? Had built undersea, basically submarines, right? And then the last component, which is really important, was they had brought on someone on the go-to-market side that understood kind of the complexity of navigating like appropriations, right? Not just the admiral, right, but or not the specific person in U.S. Navy procurement or even SOCOM, but also the congressmen and women that will ultimately kind of create the line item for that appropriations. And so we could see that in the business from a very objective standpoint. And so that's what again said, hey, stupid, right? There's some really interesting people, right? Highly relevant to what they're doing, right? Like that team, could certainly start a healthcare company, but was probably better positioned to go start, something defense related. And, we started to build a relationship with Dino. The round ended up becoming, very, very competitive, even at the Series A. And we actually leveraged our relationship with Icon, right, which is also a hardware software company. One of the co-founders at Icon, Evan Loomis, was key, I think, in being kind of that founder reference, right? So there's still some traditional, ways that you still got to win these things, and Evan was like, I think, a key reason why, he was able to communicate more objectively. Hey, we understand kind of what it means to build, tightly integrated hardware software business. We understand what it means to sell into the U.S. government, and that's kind of like the beginning of like the how we ended up positioning ourselves and then winning Saronic in the A. And there's all these other great stories about like how we ended up investing in the B in a bigger way and investing in the C in an even a bigger way. But that's kind of like at least like the genesis story of Saronic.
I wonder, so how do you calculate like how much a company will be worth? Also, I feel like in the defense or like anything hardware semi-related space, always have like a really high burn rate in general. So like how do you think about like, justify the investment return? And because like yesterday, I was like chatting with people. Let's say you invest in uh I probably shouldn't say the name, but let's call it like I don't know, like a delivery app, right? So like and like you could still like 30x when you
Yep.
invest in the Series C. But for something like hardware related, like it's very hard to like actually justify the, it's gonna like, 30x when you invest in like a Series A or Series B or maybe it's not hard for like a 30x, but like I guess in general, like how do you calculate like how likely the likelihood of something that will be like actually worthwhile when's the investment or when you make the investment? Also, do people typically get acquired by the government or like I guess like how do
Right.
you evaluate the dual use part? I think we had like Bradley from Scout Venture came on, so he was
I
like a
listened.
former.
That was a great
Yeah,
podcast.
thank you. So basically he said like they invest in dual use technology, which is like half of it is government, half of it is maybe consumer. Do you guys think about that? Or like I guess like who is a primary shopper of maritime autonomy
Hmm. Hmm.
company?
That was definitely, I think, like a big question we asked ourselves, I think, in the Series A, and I think like the way that we kind of underwrite in general, right? We think about the capex that's required, right? We think about the amount of funding, not just in that round, but certainly over
Mhm,
time, because ultimately, we're taking dilution, the founders are taking dilution, right?
mhm,
And so, in order for us to, as well as the founder, I think to accept that amount of like dilution, right, which tends to be probably
mhm,
more than in just a pure software company, then you have
mhm,
to believe, right, that the outcome is going to be commensurate with that amount of dilution, right? And so said differently, right? It has to be a standalone company, right? It has to be an enduring, company. And so the next question is, well, how did we decide, or how do we come up with the conviction that Saronic could be a standalone company and that it could be an enduring company? And I think, first and foremost, you kind of have to take the backdrop of like what's going on, globally from a national security standpoint, right? China, now has the largest, naval fleet in the world now, whereas the U.S. had that before. And if you look at the numbers, China produces 3 times as many naval ships per year than the U.S. And spends a third of what the U.S. spends, right, on shipbuilding, right, because they're more efficient, they have more shipyards, they have a very large, big manufacturing base, and it's also been a priority for them. And so you think about historically how the U.S. Has projected power, and it doesn't take a rocket scientist to figure this out, but there's more water than there is land on planet Earth, right? And so a big part of that is projecting naval power. And the biggest, I think, challenge that you see moving forward, beyond the fact that the U.S. can't build enough ships, is the type of conflict that's happening now, right? Where a $100,000 drone can blow up a $5 million tank, right? And
Cara, I think you're on mute.
Oh, there we go. Can you hear me now?
Yeah.
Okay. And you also take this lens that in order to fight kind of the next conflict, right, you're going to need things that don't cost $10 billion and take 10 years to go build, right? So that's how much it costs to build an aircraft carrier, right? And that's like minimum 10 years to go build one. And then the third component is you have the threat of hypersonic missiles. You have, again, like $100,000 drone that can effectively like decapitate, right, like a plane or something else. And so that asymmetry now requires low cost, right, or attritable systems like Saronic. And so the takeaway from that, from an exit standpoint, is that this is a capability that the U.S. has to have, right? And on top of that, it's also a capability that U.S. allies also have to have. And so one of the big updates that's happened since the Series C in Saronic, and this is all public, is that they've signed agreements, right? And won't go into a lot of detail on what that is, but with Australia, with a bunch of partners and allies in the Pacific, right, that also have a need for these autonomous devices. And so the conclusion that we reached was, given the national security need, the likely kind of budget for the U.S. Navy to invest in this capability, and then communicating that this is a priority, and then lastly recognizing that the defense primes, right, like the obvious one that does a lot of the shipbuilding in the U.S. is just incapable of doing it. And so for us, we believe that this could be a standalone company, and that it could eventually rival Northrop Grumman even as a prime.
I wonder, I'm just taking notes. I feel like one of your biggest focus is in the defense industry. So like, I guess like besides Saronic, there's like, I don't know if it's called Chaos Industries.
Yeah.
Because it is like, I mean, when I would read the name, I was like very like obsessed. I'm like, so it's like advanced defense radar startup that have like achieved unicorn status that's value over like $2 billion, and you have lots Series A and B. Why don't we talk about like in the defense theme? So I'm hearing from Saronic, it's like you evaluate based off like 3 major factors. One is the geopolitical landscape that like the government kind of needs to spend money on this. And then number two, it's like they sign some big contracts with people, or like they have tendency to sign big contracts with people. And then number three is like obviously the team is amazing, which is like very relevant to what they're building, which they ensembled a great team. But but what about the other things? So because another thing is like Manifest is like a cybersecurity platform, but I feel like before maybe we could start with like the chaos industries, because as you mentioned, a lot of the 100K Jones can destroy like $5 million tank. But in the Silicon Valley, when I go to any deep tech founder meetup or like pitch demo day, everyone is building Jones, or like robots that teach kids English. So basically there's only two kinds of stuff. It's like consumer driven stuff that are like, a ChatGPT can talk to you, but in a format of a doll or something. But on the other hand, everybody else is like building Jones. Either it's like scraping the real estate buildings, or it's kind of like defense drones. But when I go to CES, I see the Ukrainian startups. They're already build very effective drones. So I guess like, how do you think about what to invest in the defense industry and what not to? And is there anything that's Texas specific that you feel like you could play into your strengths, because since you guys are based in Texas?
Yeah. So I'll try to make sure I answer all the questions. Maybe I'll start with, I think defense is obviously like chaos and the Saronics of the world are, I think, like super exciting because you can kind of see it, you can touch it. Defense is actually only about a quarter of our portfolio. There's a lot of, I think, exciting headlines. But again, it kind of goes back to, where are the smartest people building companies, right? Not founding companies, but joining them. And so that is, again, our North Star. Is I go back to this, like, you are who you surround yourself with. And so that's kind of where data.
Yeah, sorry. I have a piggyback question on this part. Sorry.
Yeah.
So you said like smart people joining companies, right? Okay, coming from the NFT era, like I can testify, like literally all the smart people joined the crypto company when crypto was hot. Now they all pivot onto AI. So I feel like it's a little bit hard to invest, because so like you are investing in the next 3 to 5 years than you are investing in right now. So like how do you kind of like track the quote unquote smart people, and how early would you kind of go?
Yeah, that's a great question. So for us, like if you think about like the hype cycle, right? Like, and I would say, in some ways defense is kind of, in that kind of, peakish hype cycle. And that's a function of a bunch of folks kind of moving into it, right? Where we invest, and we have actually a slide that we show our LPs. And it's like kind of when we invest in certain categories. So ideally what you want to do is see this talent early, right? That may be coming from untraditional areas, and that being a leading indicator, right? Not a a lagging indicator, right? And then you want to get in before things, get too hyped and get too expensive. And part of that is because things you get, when you're early, you get better access because there's a lot of non-believers, right? People say, hey, you can't do this because there's too much CapEx, or, selling into the U.S. Navy is a bad idea. And then, sometimes you also get, better pricing as a result of that. The challenge of going later is that things get way more expensive. It's harder to access. And the reality of it is like, there may not be that many more Andurils and Saronics, right? Like in terms of hardware software companies, right? Like, just like they're not as, there's not like, people probably aren't going to back another foundation model right now, right? May not be a good idea because there's coalescing around, I think, just a handful. And so, for us, like we, try to get into, we look at things that where we see talent, moving into. And then within defense, I'd say, just to be really specific about it, one area that we've invested quite a bit of time because we see folks moving into it is around logistics and sustainment. So like, what is that? So for all the Saronics and the Andurils, right, even though they're autonomous, something or somebody has to resupply even an autonomous surface vehicle, right? Maybe now it'll be like a person, but eventually it'll be, like a robot, right? That does that. But in order to actually, prepare ourselves to fight like a conflict, right? Like in the Indo-Pacific, as an example, you need to have very, very good, resupply lines, right? You need to be able to scenario plan, right? Like if you need to get fuel to a certain location, or you need to get food, or you need to get munitions, right? That whole process, needs to be done in a way that can anticipate what an adversary may do, right? Like you could have the best plan, right? Mike Tyson says that, but once everybody has a plan until they get punched in the face, right? And so there's this whole new category around logistics and sustainment. And you see folks from Anduril, you see folks from Palantir who have left to go and build these companies to help solve this very, very big problem, where the next global conflict, there won't be enough stuff, right? So if we go fight a war in the Pacific, versus Iraq, where we left behind, like, I don't know, billions of dollars of like Humvees and equipment, next conflict, there won't be enough like missiles, there won't be enough, things for us to go use. And so we have to be really thoughtful about that. So that's an area where, we saw really interesting, folks kind of move into it. But we also, had a thesis around, that being a natural progression for all of these, the Andurils and the Saronics of the world, right? There needs to be effectively software to help not just the admirals and the generals, but the colonel, right, who's leading like a brigade, to say, hey, in this conflict, what's the best route to resupply, right? What order should I do it in, right? If the adversary responds this way, I need to do that. And so like we use data as a leading indicator, and then we've kind of moved into that and met basically every company in that category to help us kind of form and develop a thesis around it.
Totally. What about like, okay, so since we chat a lot about like the defense industry, maybe we could switch gear a little bit. I know that you guys also invest in a lot of healthcare. So for example, Blueprint AI is like a mental health AI focused like enabling tool for clinicians. Why don't we talk about like, since you mentioned like defense is like 1/4 of like a quarter of your portfolio. If you're doing 16 to 18 companies, what does the other companies kind of look like? And like, how do you quickly filter out what doesn't matter, since like I'm sure people are pitching you all the time, and based off the 4 to 5 companies that you invest in per year, every 2 months you have to kind of write a check, or maybe thinking about follow-on checks and stuff. And yeah, like let's start with what other stuff that you invest in, and then we could dive into, I guess, healthcare.
That's perfect. So I'd say that the other 2/3 to 3/4 of our portfolio is like, broadly, it tends to be, the majority of it tends to be B2B, and that could look like, traditional SaaS, or, I think, more and more, right, companies, are either AI native or have layered in AI into their companies. And, maybe I'll start with like, AI is like a hard category to invest in. You've heard this, you get questions all about this, which is like, there's so much hype, like, for every one company that you've seen, there's like 10, 5 others that do the same thing that you've heard of, and another 5 to 10 or 15 that you've never heard of that do the same thing. So we're very mindful of that. And so the question we always ask ourselves is, well, how do we get conviction, given those dynamics? Like, stuff is really expensive. There's a lot of competition. And, the cost to go, start another similar AI company is like pretty low, right? And so for us, like, part of the thesis has been thinking about, well, with the AI boom, like, what are some of the consequences of it, right? So it's almost like, indirectly thinking about like the second or third degree consequence of like the AI boom, right? And so, one of our companies is a company called Klazar. Two founders came out of Confluent and Airbnb, and really kind of like saw this world where one of the consequences of AI is the need to kind of change go-to-market. And what I mean by that is there are more and more companies that are cloud native as a result. If you're an AI company, you're by definition cloud native. And what has happened is like they need to think about new kind of go-to-market channels. And so what's been interesting is these hyperscalers, so these cloud marketplaces, so the AWS, GCP, Azure, and so more and more, there's more and more cloud spend, and each of those hyperscalers wants their cloud, their clouds to be like very, very sticky, right? Like if you use GCP, they want you to stay on GCP and spend as much on Google Cloud as possible. One way they've done that is to actually create cloud marketplaces. So the analogy is like, think about, if you, I don't know, like I think you're an iPhone user, but like the Apple ecosystem, right? Like you buy all your apps through, the App Store, right? So that similar concept applies on the enterprise side now, where, you're already spending, at a 20 million bucks, right, on AWS. AWS is giving you a discount saying, hey, like, if you prepay for $20 million of AWS credits, you'd only have to give us like 15 million bucks, right? And that money, that the credits that they get can now be spent in that cloud marketplace. And so what Trunal and Ayush realized, and these are the co-founders of Klazar, is that there needs to be a platform to help manage those companies that are listing and selling through those cloud marketplaces, now that more and more folks are looking in those cloud marketplaces. So this was a problem that Trunal had at Confluent, because he was listing Confluent on the AWS marketplace. So that has been a consequence, like a second and third degree or a consequence of this AI boom, right? There's more and more cloud spend, right? And more folks are looking in these cloud marketplaces and selling in these cloud marketplaces. So naturally, it makes sense to have a platform to help manage that. And so we invested, about a year and a half ago, and the company is like, revenue's been going like not linear, right? It looks like an upward slope. Really excited about what they're doing. So that's like one example. And the other one, again, thinking about like the second and third degree order consequence of AI is, with Gen AI, right? Anybody can create all kinds of like silly things, also offensive things, and also things that, violate kind of, your name, likeness, and image, right? Or Disney's name, likeness, and image. And so a consequence of like this brave new world is there's actually a lot of bad stuff that can come from like Gen AI, right? And I think one of the ones that people think a lot about is like deep fakes, right? There's a lot of abuse that goes on. And one of our companies, Lodi, is helping solve for that. And really both sides of that, which is, no one should be doing a deep fake video of Conrad, doing something that is like inappropriate, right? Or I don't authorize. And so Lodi is helping me scan, the internet and take down those images automatically. On top of that, right, there's also scenarios where like, yeah, like if someone wants to use, my handsome face, great, but I should take some kind of small cut of that, right? Like I'm happy to share my name, likeness, image as long within the boundaries that I've kind of prescribed. But I should also be able to monetize that, right? Maybe not me, but maybe more you, Grace, right? Like maybe more like, some other, influencer or content creator, right? And so what Lodi's also doing is, making sure that folks have the ability, right, to, take down the things that they don't want and also benefit from the things that they, other folks are leveraging. And so again,
yeah. So sorry. When you're talking about Lodi, like I wanted to ask, like, So I've seen a lot of company does this, but like I guess like how do you think about the economics? Like how does the money flow when I guess like how many people would actually pay to take down their stuff? And what is like the main customer? Like how do you kind of like since like you also mentioned that there's like 400 company that are doing this, not 400, like 15 company that you know, 15 company that you don't know that are doing the same thing. How do you differentiate it versus, their competitors that are
Mhm.
doing a takedown?
Right. So again, maybe this is like not surprising, but one, it came down to the team. So Luke Arrigoni, who's one of the founders, he's the CEO, and then his CTO, Dr. Harak is also like technically like incredibly proficient. And so for us, like a part of it actually was the technology, right? The
Mhm,
ability to go do this, in a way that others couldn't. Our
mhm,
thesis was like, yes, like it is unique, it is powerful, but there are others that could either catch up or
mhm,
eventually do something similar. What was actually more interesting, I think, and harder for others to replicate is actually go to market. So that this is an area where when we do diligence, we think a lot about, when we look at, companies in defense or even AI, like, which is what is the unfair advantage? Right? We're always asking ourselves that when we look at, underwriting a company. And for Lodi, what was interesting, and we've written about this, but Luke, way back in the day, had worked at one of these talent agencies as a data scientist. And so what he did very thoughtfully is, well, where's all the money, right,
mhm,
within content, and a lot of that resides in Hollywood, and specifically, right. The next question is, yes, okay, so it's in Hollywood, but who are the gatekeepers of that?
mhm,
And the gatekeepers are these talent agencies. And so what Lodi did very, very early on was this unfair go-to-market advantage, which is to partner with WME, which is
mhm,
one of the largest talent agencies out there, CAA,
mhm,
which is one of the other largest talent agencies out there. And without naming kind of specific folks,
mhm,
like all the movies that you go watch, right? Those
mhm,
celebrities, right, are customers of Lodi. And so that's been the initial kind of wedge. And from there, as they've expanded and now have offered Lodi to, like, you and me and anybody out there. And so again,
mhm,
there's this, like, it's kind of like in some ways you think about like Tesla, right? Like the Model S
mhm,
came out, it wasn't for everybody, but it kind of demonstrated
mhm,
the opportunity, and it helps them scale and helps show the power of what Tesla can do. And eventually
mhm,
now, like, people, there's the Model Y, there's the Model 3, and so on and so on, right? In order to kind of truly change, I think, like EVs, it's
mhm,
kind of similar with Lodi, which is starting with the folks that get hurt the most, right? Which are these celebrities, right? Or
mhm,
public figures. And then kind of moving from there to kind of the longer tail of folks who are also, I mean, there are countless people who aren't celebrities that are the victims of like deep fakes, right? So how do we
mhm.
kind of extend that solution to, everybody?
For sure. I want to be mindful of the time. Maybe I will do one real question and then 30-second fire on.
Sure.
Uh, I saw that, like, obviously you and I'm pretty sure my friend David's funds also invest in like Potato AI.
Okay.
Um,
Yeah.
so I think this is a really interesting company, and I wonder. So, for example, for a company like this, whenever I think about research, there's like deep research from OpenAI or any research related things. I feel like all the um Anthropic or OpenAI, like everybody's like doing something similar. How do you think about the defensibility when it comes to like a similar-ish feature from like a top AI company versus a startup?
Yeah. Well, I'll start with kind of Potato AI's mission, right? Because I think that's
Mhm,
always really important. Uh, you know, their mission really is to help shorten and accelerate, I think,
mhm,
innovation
mhm,
within like research broadly, right? So if
mhm,
you think about all the academic journals that get published, right, all the great research that the Harvards and the Stanfords and the University of Texas folks kind of come out with, There's actually a very small percentage of that, right? I don't know what the number is, but probably single digits that actually gets used in a timely way and then ultimately gets commercialized. And part of that is because there's natural limitation of like how many PhDs, right, that are out there kind of reading about it, and then also making the cross-functional, I think, insights, right? So like taking healthcare, some of the lessons in that and applying it to manufacturing or something, right? So like there's this, you hear this all the time, right? Like Bill Gates goes to the this cabin and he reads all these random books and comes up with an insight, right? The reality of that happens a lot in academia and also like in pharma and all of these great research places. And so what Potato AI is trying to do is accelerate that by complementing the human scientist with like research agents, right? And so taking all the corpus of all of this knowledge that gets generated and then creating all of these great insights that come out of it. And so, part of that, I think, whether you're, if you're doing a deep research report with OpenAI, like at a venture firm or even like, at Bain and Company of a consultant, very, very different than if you're, at Merck, right, or Pfizer, right, and you're even taking like research internally, right, and then trying to, draw different conclusions from it, right? It takes years and years, decades to like come out with new drugs. Like think about like Ozempic, right? Ozempic originally was for diabetes, but it took years for them to realize that you could do all these other things, right? And so like again, I'm not saying that Potato AI is going to help create the next Ozempic or something, but the goal of it is it's going to help shorten it, help speed up innovation and do it in a way where it doesn't require like more PhDs graduating from top university, right? It's actually using agents, it's very, very good. AI is great at this, is taking all this data, not just if you think about like some of the deep research stuff, it's just, from OpenAI, some of it's just summarizing, right? But what Potato AI is doing is really kind of taking it from the standpoint of like a research scientist and delivering kind of insights and then building workflow around it in a very unique way that, the OpenAIs and the Anthropics are just never going to go do.
For sure. I want to be mindful of the time, so let's wrap with like quick fire round.
Okay.
What's your favorite book?
It's a book. It's an old book, and I have actually recommended it. Anybody can read it. It's called Getting More, and effectively, it's a negotiations book that I read when I was in business school, and it has great anecdotes in it. But the conclusion of it, and it's a simple one, is you don't get what you don't ask for. And so I think a lot of people hesitate to ask for things, because they're scared. They think, they don't want to go do that. But it's this great book that, I actually shared it with my mother-in-law and she read it. I mean, like, it's a really great book that makes this point of like, you don't get what you don't ask for. So you better ask in any situation. It can't hurt.
Love. I feel like that also applies into all the immigrant mentality, just because like I feel like immigrants are like afraid of asking most times, but it's like definitely something that you need to reprogram your mind to. Who made the biggest impact in your career?
I think there's different people at different stages of my career. And I put together in some ways like a personal advisory board, and so a lot of that credit I think to helping us think about Ensemble, and Colin did the same and Gopi did the same, but I was able to rely on a lot of folks from my Bain Capital network. And the funny stat there is that I think of the folks that I worked with, like peers of mine that I worked for, there were probably 7 or 8 folks that over the course of like 10, 15 years ended up starting their own investment firms. And so like, my mentor at Bain Capital Ventures started Wavecrest. A couple, like folks in my associate class started Radiant Capital. When I was a pre-MBA, one of the post-MBAs, Patrick Chun started Juxtapose. And so early on, they were very helpful and very generous, I think, with their time. And then like most recently, I caught up with the former CEO and CIO of UTIMCO, where I worked. And so I had the benefit, I think, of having that LP lens too. So this is Britt Harris, and I don't see him super often, but he's one of the few people out there as probably one of the busiest people on the planet, and yet he makes time, for me to go grab breakfast. I don't know, like we did it like last week, and he always has these little gems that he shares, and so I'm really grateful for all the different parts of my career and the different people that I've been able to leverage for different reasons to get really good counsel.
Love. It's such a well-rounded board. Who would you invite to your dinner party?
Oh, that's always a fun one. I mean, like, this kind of like a random one. But I'm like, I love watching sports. And I think, I think competition brings out the best in people. And so, like, people are alive and people who are not alive. Like I'd invite like Kobe Bryant, because I think, beyond the sheer talent that he has, I think his sheer drive and his work ethic, that pairing, I think, is, made him who he is. And so I think a lot about that, which is, talent only gets you, so far, but it's, having a high degree of excellence, putting in the work and putting in the effort, and just being so zoned in and being methodical about it. So like Kobe Bryant, would be certainly one person I'd have at that dinner.
And where can we find you outside work?
So very recently, I kind of picked this up, probably 6 months ago, is tennis. So, back to like, the sports and, competitive element of it. My wife and I started started tennis like 6 months ago. It's something that we can do together. It's, something where you can when you start, you're like terrible and you're almost like unplayable, but very quickly, with the right instruction and then with practice and repetition, you can get, significantly better. And so that's kind of like, where maybe like on a tennis court or something. We try to play, like at least once a week, not always. But I've really enjoyed that.
Love that. Well, Conrad, thank you so much for coming on the show today. It was such an interesting conversation about deep tech and taxes and everything else.
This is great, Grace. It's always a pleasure. If you come back to Austin, I'll take you out to some good places that you may have missed. But maybe avoid this summer because it's pretty hot right now.
Yeah, I'm so excited. I feel like Texas is such a vibe, and it was like so great chatting with you and the rest of the panelists. You guys are my favorite. Also, like, hi, I don't know who you are. Hi, off. Thank you for commenting. So, like, yeah, today it's one of the days that I feel like the connection was very weak for some reason, but yeah, glad that some of the comments came through. Wanted to shout out to anyone who comments, but yeah. Thank you so much, Conrad. Okay, I appreciate you. Let me quickly end stream.
Okay. Thanks, Grace.
Thank you.
Bye.
1 sec.